with that intro, let me get on to the substance of the talk today. And what I thought I would address, basically three issues. First, the global outlook. We basically had a blow up in Greece last week. What are the prospects now for 2010? The U.S. economy, are we in or out of recession? What's the shape of the recovery likely to be, if there is one? The financial markets, which way are stocks and bonds likely to move? Fourth, what's the story on this new reality? How new and how real is it? And then finally, fifth, a few closing comments for takeaways for us as business economists. So first of all, looking at the big story, the global economy. If you look at this chart on the Purchasing Managers Index for global manufacturers, what kind of recovery does this look like? A UW or V? Yeah, it's pretty surprising. I think if you had asked most economists, would this chart look like this 6 months ago, they would say, no way. But indeed, this is the kind of upturn you've seen in manufacturers in this country and elsewhere. Pretty sharp rebound, fueling commodity prices as well. Most people would say also you're seeing a pretty good rebound in international trade. We saw that in our own trade statistics yesterday for March. Last year, world trade plummeted by about 12%. This year, we're expecting it to be up in real terms by about 6%. In the estimation of most economists, it would be the U.S. that pulled us out of recession, but indeed it was China. Despite an inefficient economic system in many respects, China was very efficient in restarting its economic engine. And at this point, of course, we now have clear overheating of property markets on the coast. It does appear that China is trying to achieve the so-called soft landing. That remains to be seen. We still think we'll see pretty good growth in China of at least 9%. Now, while we were somewhat focused on China, all of a sudden last week, Greece blew up. And as governments agonized over the weekend, they finally blinked. And now it seems to be that we are in this situation where basically everybody is too big to fail. Greece is less than 3% of the Eurozone's GDP, but at this point it appeared, at least to most market participants and governments in Europe, that it would not be a good thing to let Greece default. And so, as you know, there was basically a three-pronged strategy that was developed in a panic mode over the weekend. First, about $955 billion of loans pledged by European countries and the IMF to help fund loans for beleaguered countries. Second, a reluctant decision by the ECB to purchase bonds of troubled countries. And third, the reopening of swap lines by the U.S. Federal Reserve to European banks. And at this point, though, there are now some important near-term issues. First, will the Greek government be able to, in fact, carry through with deficit reduction programs and structural reforms? Second, will European taxpayers, particularly those in Germany, in fact, be willing to carry out any kind of bailout program? Third, will the European banks rebuild their capital bases to ultimately absorb any kind of losses that might be required from the restructuring down the road? And then finally, fourth, how much time will the markets give all this to work through? Right now, as you probably know, LIBOR rates are still somewhat elevated, so the markets are not quite sure, but they certainly have stabilized to a very significant amount from where they were last Friday. Fundamentally, though, I think there are two very important philosophical and practical issues. First, will central banks react quickly enough to ward off any inflationary implications of some of these extraordinary measures, particularly the pumping of liquidity into financial markets? And second, I think particularly important to us as business economists, have we now supplanted market forces with the importance and reliance on government intervention. And I think this latter issue raises the whole spectrum of concerns about moral hazard. And I personally am very concerned that we may be moving down this path of both moral hazard and potential inflationary risk. But at least in the near term, the economies worldwide still seem to be growing. Yes, the Eurozone grew only very slowly in the first quarter, less than 1% annualized rate, but it does appear that you're seeing pretty good growth in emerging markets, in countries in Latin America and Asia. The U.S. seems to be in recovery mode. Eurozone, UK, Japan showing very slow growth, but at least still likely to be positive. Now, what's going on with the dollar and what are the prospects? The dollar, of course, has been moving in different directions against different currencies. This chart shows the trend against all of the currencies with which we trade on a trade-weighted basis. And although we've appreciated a great deal against the euro, we've lost ground against some of the commodity currencies, such as the Canadian dollar, New Zealand, and Australian currencies. And I think later this year, the Chinese are likely to allow their currency to appreciate at least gradually, so that when you look at the overall trade-weighted picture for the dollar, the end of this year we're likely to be up fairly modestly from where we ended in 2009. Turning to the second topic, what are the prospects for the U.S. economy? It is my belief that the U.S. recession ended middle of last year. It's over, and it's not coming back anytime real soon, which means that we've been in a recovery mode for nearly a year. As you can see here, we're looking for not a spectacular recovery, but I think a decent recovery. On a fourth quarter basis, basically the average of our 4 quarterly growth rates, somewhere between 3.25% and 3.5%.